Good evening, Jonathan Camarda, Chief Investment Officer, with a strategy update. Right, we won't go into the macroeconomics too deeply tonight. Lucky you. Although we will say, since the Fed speech last week, when the market had a nice, joyous ride to the upside Wednesday, perhaps some short covering, we have ripped nicely, and obviously the adjective not well chosen there, nicely to the downside since. So you may have noticed in a lot of your strategies like bull, bear, and sector momentum, which are exchange traded fund strategies that are tactical, higher cash component than you had coming in last week, as well as some short positions as well, which we'll get into, as well as, of course, commodities and energies hedging the long equity exposure, which is both basically in the form of high dividend, high quality stocks with good balance sheets, cash flow statements, and income statements versus the high growth flyers that did really well the last 2 years. Okay, so when I refer to shorts, by the way, this is not your grandfather's shorts. Sorry, I couldn't avoid that one. From the 80s, right, we had margin calls. They made movies about this. We won't get into it now. Mortimer, for some of you veterans out there. But these are in the form of inverse exchange traded funds, which essentially are ETFs that go in the opposite direction of the index that they're representing. So if we buy an inverse NASDAQ ETF, like many of you held today, when the NASDAQ was down 3%, did okay, that goes up while the NASDAQ goes down, right? Now, these are very complicated vehicles that do recalibrate on a pretty frequent basis. So we do track these very, very copiously. So we do not recommend you're watching what's going on your screen and trying to emulate it. Again, without putting you to sleep with the alphabets, we are chartered alternative investment analysts, which focus a lot on shorting, chartered market technicians looking at charts, and chartered financial analysts, which really specialize in derivatives and hedging studies. So we're pretty well versed on how to use these and when it makes sense and when it doesn't make sense. So just that's the Surgeon General's warning that I would mention. Now, day like today, May 11th, 2022, make sure that we're referencing that. A lot of our clients did very well. We're in the green while the markets were deep in the red because, again, short cash and energy exposures. Bull bear sector momentum certainly had this. Global macro tactical, another niche strategy that we have. Now, integrated income, which is more now what we call active capital preservation, because again, this strategy is not just income-based, but it's preservation, and it's done very well this year by, again, looking and seeking asset classes that can do well in all environments. So this year it's been the dollar, it was utilities, commodities, and you'll notice that those with a component in the integrated income active capital preservation strategy that holds up pretty well, especially on down days, right? So pretty nice touch there. And then on the opportunistic growth and income, those are the stocks that have done the best this year, the solid companies, right? These aren't the high-flying Pelotons, Squares, and Rokus. Got a couple of Rokus in the office, so I won't bash them too much. But the stocks that are more of the home run hitters when things are going great and rates are low, right? Summer's out, school's out for the summer. These are, the high flyers have gotten smashed, a lot of them down 70% this year. We have very little representation in those type of assets. So opportunistic growth and income is more of the boring, plodding blue chips, right? Solid balance sheets, income statements, and cash flow statements, and as such, paying high dividends, so they pay you to wait, and they actually have earnings now, so they can actually back up the proverbial checks that they're writing, right? So that strategy's held in well this year, and certainly is in asset classes that are attractive, although again, that does not get tactical in going to cash unless we hit a worst case scenario, which we haven't hit at this point, given how that asset class has held up. So again, if you have any questions on the use of these instruments, certainly address it to your personal wealth advisor, who can definitely go into detail. And certainly if your risk appetite has changed, that is paramount, because no matter what we're doing on the top level, all that matters, like when you go to the doctor's office, are your individual vitals that drive the decisions that we're making, because we never forget you earn the money, and we just are privileged to manage it for you. So once again, Jonathan Camarda, hope this gives a little bit more detail on our tactics. Any other questions we can ask, let us know. Otherwise, appreciate your time, your patience, and most importantly, your trust.